Hi there everyone and welcome to this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances and you need to decide for yourself if it's appropriate to you. Okay, so our market closed near the lows today, actually surprising us. So back down near 67.38 actually, which just puts us back to this long-term uptrend line. So you can see here there's a long-term trend that's coming through here. That's probably one of the major patterns playing out technically in our market right now. The other's obviously this channel between 68.50 and 66.50, 666, the devil number, something around there, right? So it's just a very, very whippy market right now. It just can't quite gain above 68.50. We keep failing there time over time, but you know, we can't resist bouncing from the lower part of that range either. So you know, our market's been range bound for quite a long time, and you know, it's pretty much just the same story as what we were talking about last week at a week, right? So pretty boring stuff, to be honest, from an overall market, just an index point of view. 125 days straight of sideways movement. That's where we're at. Okay, so at some point soon, look, it can range. You know, these types of sideways movements are common in the Australian market, and they can range up to 200 days straight. We've seen that happen before as well. So this is normal for our market, guys, right? Nothing out of the ordinary here. What we have been doing typically in this marketplace right now, rather than trading really a lot of directional trades, we're starting to use option strategies to profit from time decay in the options. So one of the strategies you should be looking at is a short I condor. So that particular strategy we've done a few times now on the XJO successfully. It's the strategy we tend to lean on in this type of market, right? It's not a great strategy to do when the market's trending, but it's a fantastic strategy to do when you get this type of really tight sideways movement, right? Okay, so really not much else to say about the XJO. Pretty big bearish day today. We gave up 3 or 4 days of gains. And yeah, let's go have a look at the US. It's a bit more interesting, right? So S&P 500 at the moment still holding trend right at the all-time high resistance. If the US just opens slightly higher tonight, they're straight back into blue skies on the S&P 500. The Dow closed into all-time highs again last night, but that's been occurring for quite some time. The Dow's quite, you know, full of value type stocks that should do really well in the face of extra stimulus, especially in the face of infrastructure spending. So the Dow just keeps going up and up and up, where the S&P 500 is a bit more of a broader mix of stocks. It's equivalent of looking at our XJO, right? The S&P 500 is very similar to looking at our top 200, for instance, okay? So, you know, when we look at the S&P 500, they're testing all-time highs, right? We're nowhere near our all-time high yet. So we're really dragging behind the US in this recovery, right? And look, I'm not too surprised. I am and I'm not, right? You think about this rationally. The US have still got more stimulus to come, and this market's just hooked on stimulus right now. We're unwinding our stimulus, right, with keepers and seekers allowance stopping this month, whilst the US has just paid out a bunch of money as COVID aid out to everybody, those $1,400 checks, and now they're talking about another fresh round of infrastructure spending. So, you know, interest rates aren't going up anytime soon. Inflation yet. The US market actually has everything it needs to keep going higher. The Fed was talking about the banks being able to buy back shares and pay out normal dividends in the US as well later this year. They're just doing everything right by the market, okay? The only space I'll continue to not be 100% about is obviously that high growth techie space. What I think's happening here is growth will stay here and go sideways, if not maybe kick up a little bit. That's my prediction. But value is going to shine over the next 6 months in the US, right? So the S&P 500 will grind higher. The Nasdaq will probably go a bit more sideways, and the Dow will just keep smashing into all fresh time highs. That's my gut feel. That's what's happening right now. As long as they keep talking more and more about infrastructure spending, I think that's the theme moving forward, right? As long as nothing goes wrong with vaccine rollout, all that sort of stuff to do with the recovery path. As long as that all stays on a neat path moving forward in the US, that's the thing. Okay, but for us, look, there's strange things going on, and there's a lot to talk about, and we're kind of stuck at the moment in our market. So a few of the things, and one of the bigger things is obviously the China tensions. That's obviously rocking the boat a little bit. So we've seen TWE hit with a bunch of tariffs. So look, I'm sure you've read this news. I'm not going to go into the details of the news itself. But that in itself has got to have people a little bit nervous, and that's why we might be seeing the miners pull back a little bit here. If this escalates, then people still worry that's going to hit the iron ore market. I don't believe it will. Okay, I think the main danger for the iron ore market now is iron ore itself. Iron ore is tipped to go back maybe around 110 to 130 by the end of the year. Okay, I don't think it's going to happen quickly. I think it'll be a slow grind down there. And it'll be slow grind down as Vale starts bringing more supply into the market. Okay, but look, it doesn't warrant the type of pullback we've seen in the miners. So something is really affecting the mood towards those miners right now. Because if you start looking at PEs, Fortescue's running at a forward PE of 5.5, something around there. It's so cheap, it's ridiculous. BHP Rio also now running, I think, close to 11 PE from a forward PE point of view. And those predictions, by the way, are usually pretty light on for the miners, because most of the analysts put iron ore down at 100 or lower. It's sitting at 160 at the moment, guys, right? And we're already past, we're pretty much finishing off the first quarter of the year. If the second quarter of the year it stays at 150, well, hey, the miners are going to have a ripper of a report come August, okay? So, yeah, look, I think these China tensions are really holding the Australian market back at the moment. So you've got the China-Australian tensions, you've got keepers and seekers unwinding. So then you add the Brisbane lockdowns on top of that, and you go, okay, well, there's no keepers allowance around. Brisbane goes into lockdown, and what if we go into lockdown? It's that. So I think there's quite a few things happening out there that's holding our market back compared to world markets. Because if you have a look, we're the only real, the Western nations, we're the only market in the red today, right? So maybe we're missing something. I don't know, right? Bond yields are going up. Maybe it's that. We'll find out tonight in the US. If the US have a green night tonight, then you can see that the sentiment towards Australia is really starting to sour a little bit in the short term here. But one thing I know from, obviously years and years of trading and what I've seen, when this happens, guys, if the US keeps going up, we can't resist but to move with them, right? So we will go higher if the US goes higher eventually, and just never as much, right? We never fall off as much. We go sideways to up while the US is flying higher. Okay, that's just our market. The good thing about that is you can take advantage of that using options. Okay, so in these sideways markets, you really, as a trading point of view, should learn how to trade options, guys. Okay, because that's our go-to, very much our go-to. But look, yeah, everything else is really noise at the moment. It's not just the Australian market going sideways. Copper's been stuck at $4 for quite a long time now. Crude's been stuck between sort of 60 ish. As a bit of an equilibrium for a while now. You look at your metals, they're not going anywhere. Gold's pulled back and going sideways. Bond yields have gone, long-term bond yields have gone up, but now sideways. There's a lot of markets just doing nothing, okay? So really waiting for some breakouts, just waiting for that next catalyst, right? Until then, like I said, use your option strategies, use your short iron condors. That's what they're there for. That's what those strategies are used for. Alright, not much else to say. I'm going to leave it there, wrap it up. There's other little bits of news here or there. It's just not really worth a mention for me right now. Just waiting for the next bigger catalyst to drive us out of this sideways channel. Alright, thanks for listening in. Take care and bye for now.